My name's Seamus Cornelius. I'm the executive chairman of Danakali Limited. We're developing the Colluli Potash project, which is in Eritrea in East Africa. It's a massive open cut potash mine in the Danakil Depression, and our plan is to produce SOP, which is sulphate of potash, which is a premium potash fertiliser. We'll be producing that for about 200 years. Module 1 is going to produce 472,000 tonnes, and we'll quickly expand from there.
Seamus, thank you very much. Good introduction. Rod, nice to have you on the call. Rod, do you want to give yourself a quick introduction as well?
Sure, thanks, Merlin. My name is Rod McEachern. I'm the Chief Operating Officer with Danakali. I'm a chemist by training, and I spent over 30 years in the potash industry, first with Potash Corp, now Nutrien. And for a little over the past year, I've been working with Danakali with my number one priority, the refinement of the process for processing Culluli ore into SOP.
Great, thank you. Seamus, Rod, really good to have you both on the call. Now, I've known a little bit about Danakali for probably 10 years now, but just perhaps as kind of by way of orientation, Seamus, could you just remind me of where the project is and where it's got to in its development stage?
Okay, no problem, Merlin. Actually, we've been working on Colluli, which is our project, for about 10 years. So it's in Eritrea, it's in the Danakil Depression, and it's in East Africa. So if you go directly to the east of us, you're near the Red Sea. If you go directly to the west and the south, that's Ethiopia. So Eritrea runs along the Red Sea, the west coast of the Red Sea. We did a PFS on the project. That was about 8 years ago. Then we went on to a DFS. We followed that up with a feed study. And as Rod said, we've been working on refinements and understanding more about how to make the SOP from our ore for the last couple of years. And Rod has really been critical to that for just over the last year. The key thing for us for a long time, outside of the technical thing, which is understanding exactly how to make SOP in the most effective way from our ore, has of course been the funding. I was on Crux a while ago talking with Matt, and that was the big topic then. I'm happy to talk about it at any time, but I think today's real focus is the technical side of things. So, that's why I'm so happy that Rod's here, because Rod knows the technical side of things, and he is the critical man to answer, especially difficult questions on technical things.
Oh, well, I'm not equipped to ask difficult questions. I've only got the easy question program chip in my head today. But I'll do my best. I'll try my hardest for the difficult questions. But we will come on to funding, and we will come on to politics, because it is such an important feature of the Danakali investment case. But Rod, could you just kind of orientate me in terms of kind of a map? Can you just show me where the project is, and perhaps we can take it from there?
Sure, absolutely. So here, I'll I'll share my screen.
I mean, it's absolutely massive, isn't it? Your reserve is 1.1 billion tons.
It is. It's 1.1 billion tons, and that equates to about 200 million tons of SOP. To put that in a world market context, annual production and demand is about 7 million tons. So, we often talk about producing 1 million tons a year for 200 years. Another way to look at it is we could supply the entire world current demand for 30 years. We obviously won't do that, but it is a massive deposit, really not comparable to anything else in the SOP space. If you want to think about what it's like, it's about the same as having an 88 million ounce gold deposit, open cut at surface, running at 2 grams a ton. That's about what it's like. Of course, there's nothing like that, but that's Culluli.
So, Rod, are you ready to go on that map, or?
Yes, I am. I'll call it up.
Well, when you pull it up, and then we can talk about it. 88 million ounces. That's a bit like Muruntau, isn't it?
Well, I mean, I don't know Muruntau, but I know that if you look at the Golden Mile in Kaluli, one of the richest places producing gold for the last 125 years, up until now, from when they started, they haven't produced 88 million ounces. They've produced just under 70 million ounces. So I'd be pretty happy if I had half of the Golden Mile for the last 125 years.
Yeah, yeah, good. Okay, so this is Eritrea. Thank you. Look at that, Asmara, and so where's Culluli?
Okay, so this is Eritrea, and to the it's slightly to the east of Ethiopia and Sudan on the Red Sea, as Seamus mentioned. Asmara, the capital city, is here in the highlands, and Colluli. Can you see my cursor?
Yes, we can.
Oh, perfect. And so, yeah, Colluli is right here where my cursor is now. And so about 200 and, oh no, hang on, sorry. So Colluli is here, and then the potash will, the SOP will initially be trucked to port, and that's a distance of 270 kilometers. So it'll be trucked from Colluli to the port at Massawa.
Okay, but before we get onto that, so I can see that there's a minus topographic marking at Culluli. So this is very much part of the Danakil Depression. This is the kind of the rifting of the East African Rift, the kind of the northern extension of the East African Rift, and so this is a negative topographic expression.
Yes, that's correct. The elevation is around minus 110, I think, meters below sea level, which contributes to it being a really, really hot climate. I've heard it's one of the hottest places on Earth, and so yeah, that contributes to the temperature there. It's a very, very hot and dry climate, which for people like us that have a process that relies on or that uses solar ponds for evaporation, that's perfect. That's a great fit for us.
And when was this deposit laid down? Because I mean, I read on your website that it's the youngest. It's a very young evaporitic basin. This whole Danakali depression, all the way down to the south of where your mouse is now. Are we talking a few million years old? I'm not 100% sure on the geology. I think it's about 50 or 60 million years old. Seamus, can you add to that? Oh, sorry.
I think it depends on which geologist you ask, Merlin. And with all due respect to geologists, you can get 3 opinions from 2 geologists, but it is a fairly young evaporative deposit. I've heard anything from 10 to 50 million years ago. I don't know if anyone knows exactly, but relative to some of the others, and given the fact how shallow it is, I think that sort of suggests it is relatively new, because the whole basin is a giant evaporative deposit and there's relatively little clay soil cover on top. You're talking sort of 10 meters thick, which suggests that it's very young.
Okay, and yeah, absolutely, in geological terms. Sorry, Rod, I interrupted you. You were talking about trucking from Colluli to Massawa. And longer term, I see you've got a kind of a plan for a port on the north coast. But are you saying that stage 1 would just be trucks on the road to Massawa?
That's correct. Stage 1 will be trucked in containers to the port at Massawa. It's a distance of about 250, 270 kilometers. In the longer term, in subsequent phases, the plan is to build a port at Anfield Bay, which is about here, and that then reduces the distance to about 75 kilometers. So it really has a positive impact on reducing the trucking.
Okay, and is it still fair to say around 10 cents per ton per kilometer? Perhaps maybe you could take the map off now. I know we've got fuel inflation. I know there's ongoing fuel inflation, but are you talking about 10 cents per ton kilometer as a kind of as a rule of thumb? 10
cents per ton per kilometer.
I think our cost domestically is a bit higher than that, Merlin, because of in the current environment, lack of competitive haulage, if you know what I mean. So it's actually a little bit higher than that. Okay, so you're talking kind of $30 to $40 per ton to get it to the. Is that right? Yeah. Yep. But it's not Australian level costs at the moment. which is why it's so important to in the future to get that Anfilla Bay export facility in place. It reduces the distance. It lets us send bigger trucks because it's not on public highway. I mean, for most of that journey from Colluli to Massawa, as it's planned, we're using the National Coastal Highway, and there's limitations there on how many tons you can send through as well. So, there's a number of factors, including like lack of competitive haulage, the limitations on the tonnage that you can send up that National Coastal Highway that make it more expensive than 10 kilometers a ton, 10 cents a ton kilometer.
And how many years do you see that as being kind of the key exit route for? Kind of when does stage 2 kick in terms of the engineering and the port and your independent infrastructure?
Well, we've done a PFS already on the port at Anfilla Bay, so we know what it costs and we know that it's the feasible and the best location in the vicinity. So I'd expect from the time we got into production, it'd be under 5 years before we would be looking at Module 2 and moving that out of Anfilla Bay rather than sending double the trucks up that coastal highway. That's not something that we want to do.
Okay, and so initial capex is $300 million or $302 million as per the FEED study, and so that's just to get you up and running, and then from there you're self-financing.
From there we're self-financing. In terms of the way we've run the model. So when we talk about Module 1 and Module 2, and we model that, we've modeled it on the basis that Module 2 is self-financed. So, and our assumption is that because all ports in Eritrea are government owned and government run up to now, that the government will own and run that port. And, we'd pay the same usage fees, but our haulage costs would be massively reduced.
And presumably you'd have an interactive role on designing and construction of that port. You might even
absolutely, because we'd be the best customer. In fact, we'd probably be the only customer of any real size for the foreseeable future.
Good. Well, can we get into the process? Can we go from ore to product? Have you, Rod? Have you got an easy way to show that visually, or do you want to just talk me through it?
Sure. Yeah. If you don't mind, I'll share my screen. I have a few slides here that might be helpful.
Can I just say, as a layman, while Rod's getting his slides, that this is really interesting. I mean, I've had the benefit of talking with Rod a lot about this, and it's actually really interesting. I never thought I'd say that about chemistry, but it actually is.
Okay, so here's our process at Culluli for converting the ore into potassium sulfate. We are fortunate at Culluli to have 3 minerals. The first one is kainite or kainatite, as the geologists would say, which is a double salt of KCl and magnesium sulfate. Now, at Culluli, what is unique about Culluli is we also have potash. We have KCl or sylvanite ore, and we have a carnallite ore, which we can convert. That's real easy to convert into KCl. So we have.
Sorry, can I just stop you there? These are different stratigraphic levels, and you are able to, in your mining process, you're able to extract them both at the same time by advancing your pit in different places at different levels.
Exactly. Yeah. There's a series of different stratigraphic levels: sylvanite, carnallite, and kainite, and they're separate. We've developed a mine plan, so we mine them in an orderly fashion and transport them to the plant's run of mine stockpile. Yeah.
And I know these are all evaporite rocks, which therefore can be reversed. They can be put back into solution the other way around. But are they all stable enough at atmospheric conditions if you strip and I don't know if you've got a rainfall event or moisture event? How stable are they? Does it work having those 3 different ore types exposed to the atmosphere at the same time?
Yeah, no, that's a good question. So there are some concerns with that, with our mine plan. Sylvanite and the kainite ore are they're fine. If it rains on it and then it sits for a couple of weeks, it'll tend to cake up, but that's fine. You work it a bit and it'll move. The carnallite is a bit of a concern. It will slowly absorb moisture from the air and get converted into a brine. So you don't want it sitting out there for weeks and months and years on end. Having said that, Colluli is an extremely dry place.
Yeah,
so,
I was going to say there's not much atmospheric moisture in the Danakali Depression.
That's right. So when there is the occasional rainfall, we do have plans for pit dewatering and making good use of that water. So there are, the carnallite, we have to be aware of it. We have to manage it. There's another mineral that's in there that's a byproduct called bischofite, which is also deliquescent. And so we've developed plans for effective mining management of that so that we don't have any major problems with moisture uptake.
Thank you. Sorry for the interruption.
Oh, no problem, anytime. And so basically what our process is, we will mine these different layers and feed them into the plant. The kainite ore will be upgraded to pure kainite, or actually in the process, to be precise, it gets converted into a similar mineral, leonite. But the main thing is we need to recover it, upgrade it, and then we will simply react it with the potash. The reaction of these two minerals together will give us SOP.
When you say upgrade it, is that a physical process? Is it a washing? Presumably, you don't want to use too much water, so is it a crush and a grind and a aggregate? So, when you say upgrade it, what does that involve?
Yeah. Okay. So the upgrading is really very similar to potash mining done all over the world. What we need to do is we need to crush it and screen it down to a certain size. And that's part of the work we've done over the last year. We've determined exactly how fine do we need to grind the ore to. So we figured that out. Once it's crushed to the right size, then we use froth flotation to separate the KCl from the NaCl, or in the case of the kainite, we separate the leonite from the NaCl. But yeah, froth flotation, this flotation is done in a saturated brine, similar to what's done in the world of potash. So you develop a saturated brine, you slurry your ore in it while you crush it, while you deslime it, while you float it, and then you recover and recirculate that brine for recovery purposes.
And it stays in suspension, it never goes into solution?
Yes, that's correct. Well, okay, let's be careful here. When you first start the plant up, you'll dissolve a little bit, but by and large, but then that goes into the brine gets recirculated. Once the plant's at steady state, then the ore gets crushed, it gets slurried as a pulp in the saturated brine, and no, it doesn't go into solution. It's recovered as a solid by from the pulp by flotation and centrifuging. Now, just one more layer I want to add on that. Sorry, I hope I'm not going into too much detail, but one more layer on that I want to be clear is both the carnallite and the kainite do react with water. That's part of the process. So the carnallite gets decomposed in water, in the brine, and it precipitates out as KCl. So just to be clear on that, if that makes sense.
So, and yes, and on this screen here, where is the carnallite in the process?
Okay. This is a simplified high-level summary, and so the carnallite gets converted to KCl and then recovered. So the sylvanite and carnallite are both here. I can show you the flow sheet.
No. This is good. Sorry, it's just for my benefit. So the carnallite and the silverite, as you say, react in the brine and they become part of this KCl. And that KCl, is that what you call muriate of potash? Is that what MOP stands for?
That's correct. Yeah, it's KCl.
Okay, just KCl. MOP is just KCl. Okay.
Yeah. So if it's okay, Merlin, can I go on and show you then the conversion? Okay, perfect. So I'm just going to skip ahead in my presentation to the conversion reaction. Okay, can you see that reaction? Yeah. Okay, so it's we're so fortunate at Culluli because we have the two minerals. If you don't have the KCl, you have kainite, which is what most producers have. You can still make SOP, but you wind up having to add a lot of water. And some heat. You wind up having to crystallize, and you wind up with lower conversion efficiency. So we're really lucky here. Here's all what we have to do. We take from froth flotation, we have recovered KCl or MOP, and that came from the sylvanite and carnallite ore. We also have recovered leonite, and that is what we recovered by flotation from the kainite ore. We mix those two together in the right ratio as dictated by the chemistry. And then what we do is we simply pulp them together in a brine. Now, and I'll come back to the brine chemistry in a minute here, because that's where the secret is, or that's the important bit. And what we do is we pulp them together in a series of agitated tanks, and then we recover the solids by centrifuge.
Yep.
Okay. Then what we do is we repulp. So we take those solids, we repulp them in seawater. Pulp for a certain length of time, displace the brine because we don't want the contaminants from the brine. We want the brine to be as pure as possible. So we'll displace the brine with fresh seawater and recover those solids as pure SOP product. Now, here's the nice thing about the work we've done in the last year. This process that I'm sharing with you is will work. It will convert our leonite and KCl mixture into nice high purity SOP, and we can achieve that conversion with seawater only. In earlier, like 5-10 years ago, when they started looking at Colluli, this process was going to run on reverse osmosis or purified and expensive water. We can do this with seawater only. And the trick to it is we add the seawater predominantly in this second stage when we're trying to drive the process to completion as much as possible to get really nice high purity. We do that with fresh seawater. Then the seawater, the brine that results from this second stage gets recirculated back to the first stage. And then it goes back actually into the kainite processing. We make good use of the same water. It's called a counter current flow. So we use the purest seawater at the end of the process, recycle it back to the front end of leonite conversion, and then recycle it back further upstream in the plant. And by doing this, we can achieve a direct quantitative conversion of the leonite and the KCl into SOP, and we can consistently make really good quality material.
And thank you. And just looking down the right-hand side of this image, you talk about a leonite concentrate, a KCl concentrate, and the SOP product. Is the SOP product your commercial output, and the leonite concentrate and the KCl concentrate used in the process, or can you sell the leonite and the KCl as well?
Okay. So Yes, the SOP product is our number one product. That's our main product, 472,000 tons a year. That's our bread and butter. There are possibilities from Culluli. The KCl could be recovered and sold as MOP. It's the right grade and it's exactly the right stuff. Something like leonite could be converted into SOPM, which is another product. And so at Colluli, we will look at options for making other products, other byproducts in the long term. But in the short term, our focus has been SOP is the real moneymaker. And so we've been focusing on kind of a direct path from ore to SOP as our number one priority.
Great, thank you. Seamus, when it comes to kind of this whole process and the output figure of 472,000 tons per annum of SOP, clearly the asset can produce much more. It can flood the market. So you had a series of kind of gating decisions to make to right size stage one. Could you just talk me through what some of those decisions were? Market, capital, port, road.
Yeah, those were the key gating items, Merlin. You've hit it exactly. So obviously we needed to pay attention to the size of the market because, you've made the point. If we produce 472,000 tons, we could actually do that for over 400 years. So, you don't do that. But you need to be very conscious of what the market is. So, the annual world addressable market is about 7 million tons. But if you look at our time zone, and our time zone, I would say is Europe, around the Middle East and Africa. That's kind of our time zone over to India. That is about a 2 million ton per year market currently. Obviously that's, expected to grow rapidly, but we had to take that into account. Capital was the next thing. We needed to recognize that, with a greenfields operation in the Danakil, there hasn't been, as far as I'm aware, outside of China, any successful SOP project anywhere in the world for a couple of decades. So, we had to deal with that question. We're starting up, we're in the Danakil, we're in Eritrea. It's fair to say capital is not being thrown at us. So we had to try to manage, the capital that could be raised, the market. And then, of course, part of the capital decision was around, do we want to go to the extent of building our own port, or should we use the existing port facility at Massawa, which is a really good port facility? And so the decision was made, no, we'll use the existing facility. That makes sense. But then you have a limitation on the number of tons that you can send up the road with the trucking limitations that I talked about before. So all of those things factored into it on the basis that the critical point for us is to get the project up and running and show that we're producing 472,000 tons roughly. And from that point, it grows extremely rapidly. Then you've overcome the critical constraints on any new project, market size, product, capital, access to infrastructure. Once you have those sorted out and it's working, you can then grow rapidly, and we can self-fund it. So they're really the key issues, Merlin. You hit on them exactly.
Great.
I wouldn't expect any less.
So just in terms of market size, almost 500,000 tons in a 2 million ton market. So you'd be growing kind of by 25%, which for a new entrant with the demand profile, I can completely see that's fine. 480,000 tons per annum, more or less. You're talking 40,000 tons per month, 10,000 tons per week, 2,000 tons a day for 5 days, which is, and what size trucks are you looking at?
So it's basically 40-ton trucks going up the road. You can only send one container, Merlin. So it's a truck every 20 minutes.
Okay. Well, there we go. Yeah. Well,
and so you can see why we wouldn't want to double that, right?
Yeah.
That doesn't make sense then.
Yeah. Oh, it's just such a great project. And I see you got an NPV of kind of 900 million tons. Let's call it $1 billion in this market. What kind of EBITDA does stage one produce? What kind of annual earnings does it generate?
If you talk about Danakali, right? So you're talking about the investment case.
Yeah.
So the investment case is Danakali. We're about, on module 1, US $43 million a year, free cash flow to us after tax, after debt. That comes to us. So that's not too bad in terms of what we get as Danakali. That's US, so 60 million Aussie.
Okay, so and if you can trade on, I don't know, 10 or 12 times kind of dividend, you're talking $400-500 million company.
Basically,
just
yes.
As without any of the optionality on the long term. Good. Okay. Well, I mean, it's I've always liked the project. Politics and capital, politics and debt. I forget. Is it still on the sanction list in the US, or because there's this whole Ethiopian angle, which is so driven by kind of Western policymakers, which has skewed people's view of Eritrea. Can you just talk to me kind of where it is now in kind of international acceptance, and is the instability in West Africa meaning that there's more capital available for kind of East African projects? Is the AFC supporting you? What you got?
Yeah, I can do that. I mean, that's a really long topic, but I'll give it as, I'll try to keep it to the right length of time for the format, Merlin. So yeah, Eritrea was under UN sanctions until late 2018. So the UN sanctions, ostensibly had nothing to do with mining, but anyone who's been in this space knows that if you say, a country name and then you say UN sanctions, you're already cutting out many, many investors just with those two comments, regardless of what the sanctions are actually about. So that was the case. Those sanctions were lifted in late 2018. Subsequent to that, we managed to sign up some senior secured project debt with AFC, 100 million, and Afreximbank, another 100 million. That was done late 2019. So that was really significant. To get that first 200 million of senior debt, normal project finance debt, nothing unusual, was really significant. We signed that up late 2019. Early 2020, first quarter, we're ready to go out. We've got equity as well, committed from AFC on top of that. Everyone knows what happened in February, March 2020. Boom, COVID comes, markets collapse, everyone gets nervous, and we're still certainly in Australia, dealing with the COVID mess. So that was a real, for us, I'll say it as nicely as I can, very bad timing. In terms of us closing out the equity piece, having just secured, 2/3 of the funding through very standard senior debt from great, reliable African-focused lenders, being Africa Finance Corp, AFC, and Afreximbank. We're working through that. Unfortunately, November last year, the US decided that they would put some sanctions on a couple of individuals and some entities in Eritrea. Again, nothing to do with us, nothing to do with any of our joint venture partner, but you say the words US Treasury sanction and the name of a country, and again, you're cutting out a bunch of potential investors. So bad timing. The available pool of capital for us for the development on the equity side is definitely, and without doubt, there's no point hiding from it, limited by those sanctions.
Is it Isaiah Afwerki? Is he? Have they named the president of the US? Or
no, they haven't. They have not named the president. They've named the head of the economy in the country and the major import-export companies. So they're focusing on the political party, the PFDJ, and key people in that, rather than the president himself or anyone else. But nonetheless, these are quite targeted and intended to stop foreign investment from countries that are connected to the US. There's no denying that. I mean, any person, and I'll be straight about it, like I was last time making my call on BHP, any US diplomat or US politician who says that these sanctions are not meant to affect the ordinary person and they're not meant to limit, investment in mining, they're either lying blatantly or they're really stupid. And for some of them, it could be both, right?
Yeah.
Let's not go into it. So but it's definitely limiting. And what it means is the available pool of capital, yes, limited. But fortunately for us, you don't have to draw too many dots to connect the dots and say, well, there's 3 operating projects, well, 2 operating mines in Eritrea and 1 under development. That isn't Culluli. The major foreign investor in all of those is China companies. So you look at the countries that do not get concerned by US sanctions, and you're looking at China and Russia.
Go figure.
I don't, surprise, surprise. We're talking to a lot of people, including some others in the Middle East. I was extremely confident middle of last year. I came on, with Crux, talked about it. If it wasn't for those US Treasury sanctions in November, we would have closed the funding deal. We're still working, but we're working with different parties with different motivations now.
Yeah, well, great. Well, good luck. And it feels like a relatively short-sighted view by the Americans to cut their nose off to spite the face, so to speak.
It could it's either that or shooting themselves in the foot. I don't know which one they prefer. But anyway, the critical thing that I think is being missed here by a lot of people is, that we have Colluli in joint venture with ENAMCO, and it's 200 years mine life at, 1 million tons of SOP a year. If you look at the basin, and there is no denying that the Danakil is a massive future potash producing basin. We have 200 million tons. There's at least 1 billion tons of potash in that basin, but you can't get to it without Colluli. So whoever ends up being in a joint venture with ENAMCO, our current joint venture partner, developing Colluli, has the entire basin. So they probably have 1,000 years of potash production. It's really, it's that simple and that stark. And what those US Treasury sanctions mean is that no US or North American or, most of Western Europe companies are going to be able to be that investor. They're not. And they're going to look back in a few years and complain and say, oh, why didn't we have a chance? You did have a chance.
Yeah.
But decisions were made that ruled you out.
Yeah, strategic decisions being made right now.
Absolutely, Merlin. I mean, it's just like this question of, I don't want to go off reservation here, but people complain about, China's manufacturing so many cars. It wasn't Chinese executives who decided to shift the manufacture of cars to China. It was American executives and European executives who made those decisions.
Yeah.
Hello.
Yeah.
I don't need to say more.
Let's talk a little bit about Ethiopia and the stability of that border.
Yep.
I've never had the privilege of going to Eritrea, but I've spent a lot of time in Ethiopia, and it's one of my favorite countries in Africa. And for me, it's a complete tragedy to see the way it's tearing itself apart at the moment. And how is that affecting your border? How does that affect the mood in Eritrea?
Look, I really don't want to speak for the Eritreans, right? I'll just, because they have very clear views on this, I'll speak for us. Where we are in Culluli, we're very close to the border. The Ethiopian province that is across the border from us is Afar. It's the Afar province. And the people that exist on both sides of the border are the Afar people. So the focus of the trouble, and it's been a terrible circumstance, a tragedy, what's happened in Ethiopia, is in the northern part of Ethiopia, which is Tigray, which is not adjacent to us. It's quite a distance from us. And our neighboring Ethiopian province is Afar. Nobody really lives there. On our side of the border, the closest village to us is about 45, 50 kilometers away, back towards the sea. And on the Ethiopian side, the villages are about the same distance away, because it's the Danakil. So people don't live there, animals don't live there, plants and things other than salt mites or whatever they are, they don't live there. So it hasn't had an impact on us in a physical sense, but clearly having that much unrest and that much tragedy happening across the border, even if it's hundreds of kilometers away, it's not helpful. I mean, I just hope that we can, the government and any other interested party in Ethiopia can resolve that as quickly as possible. Because, while I'm sitting here and complaining about, it's difficult to get investment, people over there are involved in terrible, life-threatening, war-type situations, which is much, much worse than what we're going through. So, I just hope that can be resolved. What we're trying to do is important to us, but it's nothing like that. And I just leave it to the guys who deal with that all the time. We're trying to focus on developing Culluli. We know the benefits it's going to bring. We deal with the challenges that come along the way as best we can. And that's all we can do.
Seamus, thank you so much for talking so openly and so kind of frankly about,
there's no point hiding, Merlin. What's the world, right? This is what we face.
Yeah, no, absolutely. Well, I've always liked the project. I've always wanted to go to Eritrea. But I wish you every luck with the financing, because from a technical side of things, it just stacks up every time over the last, I don't know, however many years I've been asking questions about Colluli. The answers are met with a kind of a resounding positive, because the technical side of it stacks up so well. I look forward to hearing news about the financing, and then you can be up and away. And Adam.
Thanks a lot, Merlin. I appreciate the support and the interest. I mean, I have no doubt that Culluli is coming, and 10 years, 5 years from now, so many people will be regretting that they didn't take the opportunity, because it is going to dominate the SOP market around the world. There's nothing like it. And after it dominates SOP, it can start to expand, as Rod was saying, into other areas. It's a once in a lifetime type of asset. Maybe we just have to work a little bit harder to get the fruits of that. That's fine. I'm still young, even though I don't really look it.
You'll still be there in 200 years' time.
I hope not.
Good. Rod, Seamus, have I missed anything? Is there anything you want to get off your chest? I'm steady, Seamus, but
I'm going to say thanks, Merlin, and hand to Rod, because I love listening to Rod.
Yeah, no, I'm good on my end, Merlin. If there's any other questions, happy to dive into them and discuss any other technical issues.
No, I think that we've covered everything. So let's wrap it up there. I look forward to hearing the news during the rest of the year. Thank you very much.
Thanks, Merlin. I hope we can get to London sometime and actually catch up face to face.